Hello, everyone, and welcome back to our latest episode of Real Take Real Estate with the Joseph team, where we give you our real take on today's housing market and everything to do with the real estate industry. I'm your host, Maddie Maloney, joined by my co-hosts,
Joe Sambear
and Sam Feda.
So today we get to go over physician loans. So if you are a physician or soon to be a physician, or maybe you're just getting into med school, but you have plans in the future of owning a home, this episode is for you. We are going to go over our particular physician loan product, some of the loan terms, and then our success stories, because man, we got a lot of success stories with our physician loan.
We do.
Really one of our favorite loan products, and maybe kind of one of our specialties as well, that I would say. So Joe, you are the mastermind behind a lot of our physician loans.
Done quite a few.
So can you start us off by telling us, who qualifies for this physician loan? Who is this product really for? And maybe why this was created as well?
Yeah, so that's a great question, Maddie. So our physician loan products are for MDs and DOs that are either in residency or have completed residency, so post medical school. And I would say just a generalization of the history of the product, not with Dart Bank, but just across the country, is I think the thought process is, we need physicians in every market in the country. Obviously, I think everyone knows that there's a shortage of specialists in certain places. And I think the concept is we need these people in our communities. And so to attract and help them transition to different communities and make it easy to move and get settled in a new community, I think that's how the physician loan product came to be. Because there's a lot of questions about why don't you do this for other professions, or, people ask me that question. And I think historically that's kind of the answer is, we need a hematologist in every community. And so to attract that, this is an easy way to get them settled into communities where, and maybe we don't want to have too many issues as far as them saving for 3 years for a large down payment before they can get settled in that area. We'd want them settled and practicing and helping our community. They're our heroes, and we need them when emergencies come and you need someone, these specialists, we need them available in all our communities.
Yeah, absolutely.
We don't want housing to be the one deterrent from them being able to start their practice and be able to help the communities. That's why we have this product.
Yes, exactly. And also, historically speaking, currently the amount of education and the time of when you start actually, you go to school, then you go to medical school, then you have a you're going to residency, and then you have a specialist residency, and that time period and all the student loans and everything that comes up, you can get pretty far before you are making a considerable amount of money. It's going to take a long time to catch up and pay some of those student loans down and save up for a significant down payment. So that's the main essence of the historical why there's a physician loan product. And I would say one of the loan highlights that leads us into that is it's a zero down product. That's what's known for throughout the country, is you can zero to little down. And in our case, zero down in this market and in a lot of other markets throughout the country is, it's similar to the conventional, the jumbo loan limit. So in this case, today our product sets at $750 and below, it's zero down. When you exceed that, it's a lower down payment. So the scale changes a little bit, but it's still a lower down payment than would normally be required. And it's a great product too, because it can be utilized for a purchase of an existing home, a new construction loan, and a renovation loan. And that's one of the Dart differentials on this product, probably compared to others, is you can utilize it in those different formats. And we have the flexibility to say, okay, well, I like that existing house, but I'd like to finish that basement and do it right now. And we can do that. That's a renovation product. Or I want to do a new construction. We can use that physician product for that.
And that's a huge benefit too. And with this product, as well as a few others, is it's kept in-house with the bank. So we have those flexibilities to, help these physicians out, get them in comfortably, and, make it make sense for them and have a smooth process as possible by keeping it in the bank's portfolio.
Absolutely. And then one of the other loan highlights I would say is there is no mortgage insurance required. Mm-hmm. So that's a big one. It's consistently, if you don't put 20% down with most loan products, you have some type of mortgage insurance. This product does not. Sam, maybe you can touch on the student loan piece and why that's a big deal in this product, based huge. On the amount of student loans a typical physician would have.
Yeah, absolutely. So a lot of it, you can run into a debt to income ratio problem where you have all these larger student loans, and with most Freddie Mac, Fannie Mae products, you have to account, even if they're in deferment, if you have $100,000 in student loans, you'd either have to account for 0.5% of that outstanding balance or 1% of that outstanding balance if it was a Freddie or Fannie loan. So then, we're counting $1,000 if you have a $100,000 balance against you in your debt to income ratio, where that $1,000 could be used in their new mortgage payment and not for the student loan. So that this product with the physician loan allows us to not have to include any of that student loan debt in your overall debt to income ratio. So if you had $300,000, $400,000 in student loan debts, that is basically not counted against you on the mortgage application.
So basically, for our physicians, if you're in residency, when you come to us, don't, question on, we know that you're going to come to us pretty much broke and in debt. It's just you don't have time to have a job when you're going through med school and your residencies. That's why we have 0% down, and we don't have to include those student loans, because we know how challenging that your programs are going to be, and that's why we account for that. So if you have any questions or any concerns, or are like, oh, I'm $300,000 in student debt, like I have no idea how I'm going to be able to afford a house if they qualify this, we understand that. We know exactly what you're going through and what to expect when you get out this residency. So that's why we have this program set up this way.
I would say the other thing that would be a little bit unique to us, I would say, compared to other banks that offer physician loans, is a lot of time there's relocation involved. Because another thing that's a lot of these physicians sacrifice is having to move around quite a bit. So you go to, you get your undergrad here, but then you have to go to medical school there, and then when you get residency, you got to move there, and then when you finally get your big, you're in your practice, you're ready to practice. This is what you've been practicing for all these years, and you're starting off in your career. You might have to move again, and because of that, it's really nice to be able to know that you can use that zero down product. And sometimes what will happen is these placements happen a long time in advance. So you're wrapping up your residency and you're starting to look at these, what hospital system, what practice am I going to join? That contract might be 3 or 4 months in advance. And so now like, okay, in July, I'm starting here. Well, a lot of banks will make you work there for 60 days, get pay stubs before they'll let you qualify, which can be very problematic, because now it's like, well, I'm moving my family. I don't want to move twice. I don't want to move, find a short-term housing just to turn around and move again.
Exactly.
And so we will use common sense with that, and we can use the contract as long as it's completely executed without any major contingencies that would affect the probability of starting employment there. And that's a huge advantage for this product, because now you can start looking for a house. You can try to get settled, try to time it so that your move-in date is similar to when you're actually coming as yourself or others with you. So.
And there was one, too, I think you had fairly recently where you got that exception. It was that they weren't starting for 60, 90 days after you ended up closing on the home, which allowed them to get their family moved and really get settled comfortably, whereas bouncing around a few different times, being stressed about that, among all the other stresses, really helped them out.
And of course, we did all our due diligence to make sure they were starting, and they had the good credit. They had met all the criteria, of course. So the other thing, not just our product, but we talk about our Joseph team, and as a community bank, Dart Bank, what our level of customer service is. And doing this for a long time, having the privilege to work with a lot of specialists in a lot of the different fields of medicine, the time is so valuable, and it's so hard to get away during the day to do an application or to think through the loan product or to have a conversation of the next steps. So I will say a majority, 95% of these calls happen after hours, happen on the weekends, happen at the hospital. I mean, Maddie, you've gone to the hospital, I believe, before to drop off things and pick things up. I've been in the ER at 11 o'clock at night to sign things. We will do that because we know the challenges that are presented to you, the stress presented. And I think that was a big difference for us of delivering, because again, several banks have physician loans, but I think the pressure of having to work between the 9 to 5 and make all those things happen, step away from a patient. I mean, we don't want you to step away from patients, which you would have to do. And so I think just being available for you and trying to meet your goals and objectives of moving here, we pride ourselves on being able to help, and that's why we've had the privilege to help a lot of our physician partners.
Exactly. We know exactly where you are, and we're going to meet you there. We're going to help you, and we're going to go above and beyond because we want this to be a stress-free process. We know that, starting a new contract, moving your family, that is a lot of stress-inducing new life changes that you're going to be going through. And we don't want you to have to, get a hotel, get a short-term residence just so that you can start your contract and then we can get you all pre-approved and finalized. No, we understand the process. We know exactly what you're going through, and that's why we have our process and our team set up this way so that we can help you with all of your needs. So, all right. So any last comments on this? We kind of went over exactly who qualifies for a physician loan. We went over the product details, 0% down, no MI, huge part there. We're always going to be available for our physicians.
Just a couple of quick other things. The residency, so you might find you're looking for something a little bit smaller, a little bit less expensive, more short term. When you're residency, we can do that as a physician loan too. Yep. We do see a lot of that. We also try to set up the product. If you're going to be in residency for 3 years, we try to put you in the right product for that period of time, and we take that into consideration. So I think the residency is a big one. Also, we field a lot of phone calls of, I'm in medical school. Next year, this is what's going to happen. It's always good to feel free to call us way in advance of making your plans, and we'll be there to help you bring it to success.
Yeah, absolutely. And then I feel like you had one too where, I'm sure there's been plenty, but the renovation product, I believe we briefly touched on that, to where that's a huge benefit, especially in a tighter market where there's not a lot of inventory. Having that capacity to, get in ahead of time, make those changes, wrap it all into one loan and, work those renovation costs into the low down payment product.
I think we have had a lot of those, and it makes sense too because, when you're moving into a market like that, the alternative is, I want this finished basement because of whatever reason it might be, or I need this kitchen updated, because I'm not going to have the time to move in and deal with this later, or I don't have the time to do a whole new build job because I don't want to wait 18 months. I don't have housing now. And so having that additional option, again, even the resources of, I'm not going to have a huge chunk of money because I'm really trying to tackle that. I'm buying into this practice, or I'm buying into the surgery center, or I'm going to tackle the student loans. I don't have this huge chunk of funds to throw at it today. I might in 2 years, but not today.
Exactly.
So I think that's what a huge benefit.
Yeah, because I'm sure it happens a lot of times where they'll walk into a home, oh God, the place needs 100, 200, 300 grand worth of work. You don't have to pay out of pocket.
Right. You can build that in.
You can, essentially build it right into the loan with the zero down payment and make that home, how you want it.
Yep. And we'll have to work, of course, with a realtor partner to make sure we have the timing, or do we have to come back to do it, after close and do that? And anything like that with a renovation would be, one contractor with multiple bids, and a process for it, but we've had success with that. Absolutely.
And it's huge in this market where there is a lot of low inventory, not many options. And, you might not have the flexibility of being able to choose a different area. You may want a home that's, within a good distance of the hospital, a shorter commute, because that's huge. And so you want a certain neighborhood. Maybe you have kids and you want to stay in a certain area. So being able to, secure a home that maybe isn't exactly what you wanted, but has a good foundation, has good bones in it, and then you can make it exactly how you want, knowing that everything can be financed in with our renovation loan. So definitely a great topic and something that all physicians, or if you're in residency, you should be aware of, as you begin your home search. All right. So those are some great points for all of our current physicians, future physicians. We hope that this episode has helped. If you have any questions or just kind of want to get the planning process started, please don't hesitate to reach out to us, call us anytime. We are always available for you. Any questions that you have, we are here to help set you up for financial success. So thank you again for tuning in to today's episode of Real Take Real Estate with the Joseph team. If you have enjoyed today's episode, please, leave us a comment, give us a 5-star review. We would love to hear your feedback. So thank you again, and we hope to have you on our next episode of Real Take Real Estate.